What's up, everyone? Hope everyone is good, and welcome back to today's video. So, today it is Sunday, and we will be doing a weekly Outlook video, right? Forex Weekly Outlook video, and in this video as well, I will be showing you guys practical ways of how to go about entering um, these pairs, right? By showing you a few trades that I had taken during the week, right? So with that being said, let's get into it. The first pair we'll be starting with is AUD JPY. Now this is the weekly time frame as always. I am a intraday to swing trader, right? I do tend to hold my trades for a day or two, and so my higher time frame perspective is my weekly time frame, and then my intermediate term time frame is my 4 hour, and then my entry time frame is the M15. So on the weekly time frame, I'm trying to just get the narrative in terms of what is the market doing, what is the long-term objective when it comes to the market. And if you've been following for the past few weeks, past few months, you should already get a or have a gist of how we go about looking for draw on liquidity from the higher time frame, right? So at its basic, at its basic, um, what we always look to see is once external range liquidity has been taken, which exists at highs and lows, right? We can see it at this high, it exists as buy stops. Once external range liquidity is taken, we'd then like to see the market draw towards internal range liquidity, which is in form of a fair value gap, right? So we can see that after we hit this external range liquidity for the past few weeks. I mean, we started consolidating there, but last week we did speak about this, how we potentially like to see this, or at least this previous, this week's worth of trading, well, not this week's, but this previous week's worth of trading having to push towards the downside, which is this candle right here. And so we'd like to continue this narrative until we reach this weekly fair value gap. And once we reach this point, then we can look to see the market continue higher so as to reach the external range liquidity. But with that being said, let's go on to the H4. Cool. So on the H4, this is my intermediate term price time frame, I meant to say. So on the weeklies, long term, right, we understand that the drawn liquidity is at this point. On the H4, we're trying to confirm whether the market is in fact following that idea or not, right? That's the basic idea of what we're doing on the H4. So we can see for a period of time, the H4 was in bullish institutional order flow, right? In order for the market to satisfy that idea of having to draw towards this weekly fair value gap, we need to see the H4 institutional order flow switch into, instead of it being bullish, into bearish institutional order flow, right? So after we take out these buy stops over here, we get a market structure shift towards the downside, which is now indicating the, you know, the likelihood that now we're switching into bearish institutional order flow. And so we start to see that happen. And we spoke about this as well in the previous video, how we see how this candle broke this candle's high over here. This is an intermediate term high because it rebalanced this fair value gap. And so once price action breaks that point, immediately we see that the H4 is now in a bullish environment, which would have meant that we couldn't look for selling opportunities, right? But I did talk about how we had this low marked, right? And how we anticipate, or if we had to see the market switch into, or I mean, break this low, then we'd switch back into bearish institutional order flow. Therefore, we'd look for selling opportunities. So coming into, you know, when was it Monday as well as Tuesday, we got a selling opportunity over here to push the market lower because we had then switched into bearish institutional order flow, right? And so again, we pushed lower. That is still our draw, but we can see again this high rebalanced this fair value gap, which resulted in the market having to push and make this lower low. We see that this candle has broken this high, which is now giving us an indication that the H4 has now switched bullish again, right? Which just essentially means that we can't look for selling opportunities. So what do we do? Cool. So what we would like to do is wait for the market to switch again into bearish institutional order flow. This low over here rebalance this fair value gap. So coming into this week, if we do see the market push lower and break that low and give us a pull back into potentially an order block, etc., we can then continue the market into that weekly fair value gap. Right. But there's also the potential likelihood of the market continuing higher, rebalancing this fair value gap, either continuing and totally disrespecting that narrative of going lower, or it pushes higher, then we get a market structure shift, I mean, a break of structure towards the downside, and then we continue to look for that draw towards this weekly fair value gap. And once we reach the weekly fair value gap, if it does happen during this week, then all we'd wait for again is for the market to give us a break of structure or a change of character on the H4, which would give us an indication that this weekly fair value gap is holding as a clear support, and we can then anticipate bullishness towards the upside so as to reach into this liquidity pool, right? Like I mentioned, after external range liquidity is taken, which is that point over there, we see the market draw towards internal range liquidity, and then from internal, we want to see the market draw towards external, right? So where we are at the moment, we'd like to see the market still draw towards this external range liquidity. It's just that we're in a bullish environment, so we can't look to sell it until we switch again into bearish environments, right? But yeah, that is my outlook on AUD JPY. Cool. Moving on to Euro GBP. This is the weekly time frame. What are we seeing? Again, how does the market move? From external range liquidity, once it's taken, the market draws towards internal. From the weekly fair value gap, the draw was towards external. And remember, for the past few months, we had been trading this until that point. And once external range liquidity had been taken, the next draw was where towards this fair value gap over there, which is internal range liquidity. From the internal range liquidity, the draw is towards this external range liquidity. And so we can see that we're still fulfilling that, right? We can see as well that last week's trading hit this or reached into this weekly fair value gap, and we can see how we completely respected this nicely. This might just hold as a proper support to continue the narrative higher so as to reach that point over there. Let's look at the H4. Cool. So looking at the H4, just to give you guys a bit of context, that's that weekly high, right? That liquidity pool that we want to see the market draw towards, right? But we need to understand what's happening on the H4. We can see this is that weekly fair value gap that the market drew into. We didn't respond in last week's trading to by pushing higher, right? We went further into discount prices, hitting that weekly fair value gap. And we had been in bullish institutional order flow, but we can see that as of recent price action, this high pushed low, this low rebalanced that fair value gap, and then we see how this low made that high, and this candle then broke that low, so which signified that the market was then in bearish institutional order flow. But because the H4 hit this weekly array, what we can wait for here is either the market makes a high, makes a low, gives us a market structure shift. The market structure shift will be enough um, evidence or confirmation for us to push the market higher, because we know that the H4 is coming off of a weekly array, right? And then we can continue the market higher using arrays such as order blocks, fair value gaps, that sort of a thing. It is also possible that the market continues low. I mean, this give us a signal that the H4 is bearish, so we could still push lower. And if that does happen, all we doing here is just waiting for that market structure shift towards the upside. And once we get that, we can then look for those bullish opportunities once the market hits points of interest, right? And I will show you examples of how you go about entering when the market hits a point of interest. But with that being said, let's go on to the next pair. Cool, similar narrative here. What is the weekly time frame telling us? After external range liquidity got taken, the market drew towards internal. From internal, our draw since May, yeah, since May has been towards this low, and we can see how we've been coming week in and week out, just looking for those selling opportunities towards the downside. We can see how the market drew into this fair value gap at some point, pushed low, and then last week's trading as well pushed into this weekly fair value gap, and we can see how nicely it rejected it. So this might hold as a proper resistance to continue that market lower so as to reach our long-term draw on liquidity, which is that low. Let's look at our H4. Cool. So looking at the H4, I mean, we had the conversation last week, and we can see that the H4 pushed high into this weekly fair value gap, and then it broke this high, which is an intermediate term high, right? And once price broke that high, it meant that the H4 was in bullish institutional order flow. It was bullish, right? And so, because we're coming off of a higher time frame array, all we wait for is for the market to give us another market structure shift towards the downside, which is a change of character, right? Which happened over there. We can see that this low made a high, and then this candle broke through that low with heavy levels of displacement, right? And so, after that low got taken out, we can see how the market then pulled back into this H4 fair value gap. Now, I'll show you how you would have gone about entering this move towards the downside. Let's look at the M15. Cool. Looking at the M15, what you want to do is when you come in into uh, your trading day, you want to ensure that you have two kill zones. You have a London kill zone. Mine is essentially from 2 to 6, right, for London session. And then for New York, I start trading or looking for opportunities again from 8 to 12, right? This is New York time. So look at how important price and time is. That's our weekly, not our weekly, but our 4-hour fair value gap. New York session steps in. I would have an alert at this fair value gap. We can see how the market reaches into it during London. I don't know if I said in New York. This is London. Hits that point. Now I wait for two arrays that suggest bearishness. So this fair value gap over here was supposed to hold price action by having to push it higher, but we can see how this candle breaks through it. That gives us an inverse fair value gap, and how this candle, when it closes, we get a fair value gap there as well. So those are two arrays suggesting bearishness for me. So it just entered directly at that point, SL on that high, right? And then you can look to target whatever it is you look to target. I look to target maximum 4R, but you can see your 2R, 2.5 got hit here. That is how you'd go about entering the market, right? But let's go back to the H4 so I could give you guys a possible outlook. Cool. This is H4 time frame. That's that long-term drawn liquidity. What could possibly happen this week? We can see this is a rejection block, could hold as a proper, institutional resistance point to continue the market lower. We still have that fair value gap, which is holding quite nicely. The market could still go up there, tap this fair value gap again. There's also this bearish order block over here as well, which is also holding as a nice key level for the market to push lower, right? So we don't necessarily know what the market will do, but what I'm giving you guys here is an idea of what you could or how you go about looking at your points of interest. The market could push lower off of this rejection block, and once you get a fair value gap in future, you just wait for the market to draw into that fair value gap or order block. That would be your point of interest to then push the market lower. I've already showed you how you go about entering, right, in your kill zones. Let's move on. Cool. Moving on to NZDCHF. Again, external range got taken. The market draws towards internal. And you can see since May, we've been looking for that draw towards the downside, and eventually it hit it in the week of the 22nd of September, right? So after external range liquidity gets hit, what were we looking for? The draw towards internal range liquidity, right? And we spoke about how, looking at the previous weeks of worth of trading, we wanted to see bullishness towards the upside, and we can see how the market responded to that. Let's look at the H4. Cool. This is the H4 time frame. Remember what we spoke about? I gave you the outlook last week that the H4 was in bearish institutional order flow. What we wanted to wait for was for the market to give us a market structure shift towards the upside, right? Which would then indicate that the H4 is now in bullish institutional order flow. So we can see that. So we can see how the market has given us that. And as of recent price action, we can see we have this fair value gap. There's a rejection block. We're still looking for bullishness towards the upside. Just note that this low should not get broken. If it does, that just essentially means that the H4 is now switched bearish. So you do nothing. You do not look for bullish opportunities. If that happens, you either wait for the market to give you to switch bullish again to continue the market higher, or you just wait it out for the entire week, right? In any case, I will show you guys an example here of how we went about entering this trade, right? So after we got this market structure shift, in fact, we can go bar replay that. After we got that market structure shift, the draw or our point of interest was firstly this mitigation block as well as that breaker block over there. So we can see how the market hit that. Let's go into our M15. Cool, this is our M15 time frame. Now, relative to this low and that high, this is our premium and discount tool. You can see that we are currently in discount prices. But the next thing you want to wait for is for the market to hit your kill zone, right? That is 2 a.m. in the morning, London session has hit, right? We can see our London session first kicks off, sweeps the low. We know that London session tends to set the low of the day. What are we waiting for here? I see that this is one array, which is suggesting bullishness. That is a rejection block. The next array over here is when the market breaks this high. That is a market structure shift, right? Indicating bullishness. Those are two arrays indicating bullishness. So immediately when that happens, I know that London session has set the low of the day. And what can I anticipate? That saw that manipulation. Now we can see distribution towards the upside. And so max 4R over there in terms of draw. Another thing, just a key, just a slight nugget or whatever that I could add to help you guys out. When you have your premium and discount tool, add these numbers, the 62 and 79% level. These tend to be, high probability levels where you see the market reverse, right? And you can see after it hits the zone in line with our arrays, you see how the market responds to that region and the market pushes higher. Right. Again, like I said, NZD CHF is bullish, so come in tomorrow, look for those bullish opportunities to continue the market higher. Let's continue. Okay, cool. Can move a bit quicker. Again, external risk liquidity got taken. We spoke about how we'd like to see the market draw into this fair value gap, but we can see we have another fair value gap here. So clearly our draw is towards this point. And once the market hits this fair value gap, we no longer look for buying opportunities, but now we anticipate that the market would reach or draw towards external range liquidity. Let's look at our H4. Cool. So this is our H4. By the way, I have both fair value gaps marked because there's a likelihood that the market could still reach into that one. But the moment price hits this point, don't look for buying opportunities. Wait until you get that market structure shift towards the downside. Again, we spoke through this price action, in last week Sunday's video. Again, what do we anticipate? Market structure shift towards the upside, and essentially this is the exact narrative of what we're doing on the weekly time frame. External range liquidity gets taken. You see external, the market draws towards internal. Well, here, external range liquidity got taken. The market drew into this mitigation block. External, again, you see the draw towards this fair value gap. Nice buying opportunity that I'm currently in over here. I was targeting a 1:4, but I have to cap my TP over there because that's that weekly array. What do we anticipate this week? Note, if price hits this fair value gap, wait for a market structure shift towards the downside, continue the narrative lower. There's also possibility that the market does continue higher, hits that fair value gap, market structure shift, wait for a point of interest, continue the market lower. That's all we're looking for on NZD USD. There's a possibility as well that the market just pushes lower. Does happen, we can't neglect that possibility. And if it does just push lower, then there's nothing you can do. Maybe it can push lower, switch bearish, maybe trade a bit, switch bullish again, then you just look for those buying opportunities until the market reaches that point. Okay, cool. Clearly, I've run out of time, but Euro NZD, again, similar thing here. The draw is towards this fair value gap, and you get a market structure shift, continue the market higher. Right. I'm sure that you guys can look at this on the H4. But with that being said, kind regards, the architect.